Hey, Steve, Jamie, how's your Tuesday?
Jamie, Andy, Steve, good. Hey, thanks, Scott. Hello, Andy.
Hey Scott, hey Steve. Hello everybody. How you doing today?
Good. Good Tuesday. Another afternoon webinar, and here we are. Can't believe another week has transpired. Looking up at the attendees, people slowly ticking their way in. Some of the regulars know that we spend the first couple moments here on some disclaimer slides, so let's get right to it, and then we'll get to today's content. Of course, the Trade of the Week disclaimer reminding you all that we're not advisors of financial advisors. We are educators. Trade Ideas is a software as a service subscription. And anything you see or hear today is really just my opinion or Andy's opinion, should not be taken as advice for financial planning. So with that out of the way, we'll just remind people we've been around for 14 years, a very in-depth program we have, which has a learning curve to it, and it's hard to climb that learning curve in just a few short days. You know, a lot of traders that first use our product take a couple weeks to really kind of feel out all the areas and explore the entire platform. So to help people, we have a lot of onboarding type of events and real-time activities. The live trading room from Barry primarily is the main one. Hundreds of people in there every day exchanging ideas in real time on the market, some good traders, but most importantly, Barry reminds us to send people to his room if they're having trouble figuring something out or how to do something. He's just on the spot right there. Barry on the spot can demonstrate it for you. So it's a free resource. Like I said, there's trading rooms that are charging money for the kind of content you're getting, and not to mention the trade idea support that Barry is generous with on his time. We have the afternoon webinars, such as today, Monday, Tuesday, Wednesday, and Thursday. Friday, we do not have an afternoon webinar. Most people in that community are taking off for the weekend. They don't want to stick around after a long weekend and listen to us drone on yet again. So we have a morning session, which we call the Friday support session. It goes anywhere from 2 to 3 hours, depending upon your participation, but a lot of people show up with questions, comments. We help them get a scan going, help them kind of keep things in perspective. But whatever you're looking for support, technical, the platform, scanning support, even market ideas, just come on by. It's a great time on Fridays to kind of wind down the week with an open, casual, open forum. We also have the TI University, which currently is still live. We have a recorded version of it as well, but we still show up for the live version. And it's Monday through Thursday from 12 to 1:30 roughly Eastern. And each day has a pre-contrived content schedule. We start with the easy stuff on Monday and finish with the more advanced stuff on Wednesdays and Thursdays. So a lot of things going on to help people stay involved and stay immersed in how to use trade ideas. Here's a bigger glance at the Trade Ideas University, which I just mentioned a moment ago. And that takes us to the presentation for today, which is going to be kind of interesting. I think there's some possible market change winds in the air. We'll see. But I'm going to show you as to why I feel that, which is a great segue. Why do I feel that? I'm using the Trade Ideas technology to circle the wagons and show me the items of interest that I need to see to help kind of make decisions, whether it's on an individual stock basis or direction bias for the day, or even bigger. But no man and machine are good on their own, meaning you really can't expect to turn on the machine and turn your back on it and go play golf, do whatever, and then have bank deposits being automatically uploaded. That's just not realistic. Trade Ideas is a great tool to work with the human being. It curates a lot of great ideas, but it's still up to us to manage and navigate the markets and manage our own personalities and our own shortfalls and risk management, because believe me, emotions do come into our risk management. All right, so that said, October 1st, a new month. Fourth quarter. Actually, no, October, November, December. Yeah, I guess today is the first quarter, isn't it? Wow, how about that? We're going to go over the market recap. Definitely a lot to talk about there. Some thoughts on what happened in the AI today, or what didn't happen. The trade of the week, T-Rex, Trex fired. I certainly have some thoughts on that. which will all kind of dovetail into the remainder. We talked about what's working and what's not, some of the market tells, some of the things I'm seeing that's giving me an opinion of where we might be headed or maybe not headed. I want to explore a term that I didn't invent, but Andy knows what I'm talking about in the golf world. It's called moving day. And I'm using that, borrowing that term for trading. I'm going to show you what moving day is on a chart and how to play it. Typically in the golf world, it's Saturday. It's the day people move up the ladder and make the big move. But stocks can do that too. So I'm gonna give that a title, a glossary, moving day. We'll talk about that. And then a little something at the end, how to flip a scan that I think might show us some interesting setups. I'm not really going to map out a lot of individual setups this week because, let's get right into it. This is because this mess, this nightmare, I shouldn't say nightmare. Let me try and open this up. I know there's some regulars that show up with Jamie and I yesterday. I did the market recap yesterday. Let's back up one day, see if we can do that. One more try. There we go. So here was yesterday, and I talked a lot about this orange line, which I inserted, and I was calling it a pivot line, a very important pivot line, which corresponded to many days going back. All right, support there. Get my little drawer out. Support on this day, resistance, resistance, and then yesterday was kind of resistance. We could even go back farther and see more significance, I think, on that. But let me try that. Here we go. Maybe not. No, that's it for that. So
Wait a minute, Steve.
yeah.
I'm a little puzzled here because on your daily, the line is below that orange line, but on the intraday there, it's above it. Oh, you're looking. That's yesterday. That's
yesterday. I haven't.
Okay, I got you. Okay.
Yeah, thanks for reminding me.
My
So this is what we were looking at yesterday, and let me back this out too again. Okay, so guys, this is my interest level pivot line. Defined this yesterday. We talked about it. And what happened today, I'll just scroll through intraday. Here's our open. And then we went back to yesterday where I said, this is an extremely interesting inflection point right here, right above the extremely interesting pivot point that I'm watching. So two very solid brick wall type levels of resistance. And I even said that today, as we came into today, more than likely, this moving average is going to cross. Let's go ahead and zoom into today. There it is. There's our cross. The 10 period is now crossed below the 20. And boy, look at that. We spent only a little bit of time opening up today, and I even sent out a tweet that said, this is the do or die moment for the S&P. It was about 298.40, and we were right there. And sure enough, that was the do or die moment as we kind of clear out. A giant wick developed as it reversed, and then we can see the pivot line transposed to both. We didn't even look back. We need to zoom forward here. There we go. Here's what happened. A little bit of data came out at 10 o'clock Eastern. The I think it was PMI, Purchase Managers Index, showing a little bit of slowing in industrial orders, and that's all the market needed to drop the bids. And for the rest of the day, we had a lot of selling going on. So back to the bigger picture, what I had said yesterday in Jamie's session was that we had 3 attempts with a stick save, if you will, to use a hockey reference, of price action trying to break the 50-day moving average, and the test failed if you're a bear, because the price action bounced right back up into the range. But our upside of our range was held by that pivot line we talked about, and the moving average is just a hell of a brick wall there. Well, what I said yesterday was that the bulls do not want to see another attempt on this 50-day moving average and have it fail. And by fail, I mean a significant close below the 50-day moving average. What do you know? That is exactly what we got today. So what we have is some technical damage that happened today in the S&P. This is just even more of a brick wall after that failure again today. I'm not seeing a whole lot of good opportunity. I'm not seeing a whole lot of good cases right now that the bulls can make. They're back on their heels again. We did not spend much time at all back above that pivot line, above these moving averages. This is the day right here we should have launched from, in my opinion. Going back, that was a beautiful reversal, down, back up, test. The bulls won that day. we had a lack of follow through the next day. All it wanted to do was make a new high, only to signal sellers coming in. And since that moment in time, the bulls have been off on their heels. So two completely different, let's do it this way, two completely different looks here on the chart versus where we were back here and where we are now. Some damage was definitely done. So let's move on to the next, which is the NASDAQ. NASDAQ was already broken below its 50, but it didn't give back as much today as the S&P did. But we also talked yesterday, same thing going on, that moving average crossed below the 20, and that moving average is acting like a brick wall to the upside of resistance. And it's even more so, it's even more significant to me, and I know Andy agrees, when you see this jam up and then a reversal and it turns into a giant wick. Well, we always notice that on the downside, these downside wicks over here. Well, they happen on the upside too. There's an upside wick, there's an upside wick. Well, today it gave us an upside wick right into the pocket, right into that brick wall of moving averages. And there's also, I'm gonna just draw because I can see it right now. There was a pivot line there as well. And I'll show you, look at that support there. Kind of support there, became resistance a few days ago and resistance again today. So we're on the wrong side of the pivot lines now. We're on the wrong side of the moving averages. S&P 500, NASDAQ closed below its 50-day moving average. What about the Dow? Well, the Dow played and jumped in the game today. It decided to post a not a significant, but a close nonetheless below the 50-day moving average. And I bring this up, guys, because again, remember who runs the markets? Who runs Bartertown? The algos run Bartertown, and they have to have waypoints and targets and bogeys and things like that. So when you start to see another data point pop in here in the quant models, I mean, forget the market making aside, how about the quant models that run the billions of dollars? They're going to look at this close today and say, well, shoot, we now have, let's go to IWM, all four of the indexes that we usually talk about here, the Dow, the S&P, the NASDAQ, and the Russell 2000 are all four below their 50-day moving averages. And that's usually kind of a benchmark bellwether level. Is the stock in an uptrend or a downtrend? A lot of people just use the 50-day moving average. If you're on the upside of the 50-day, you can consider that healthy. I know when Andy and Michael created the score composites, I bet you anything the 50-day moving average has a lot to do with that, doesn't it, Andy?
Oh, yeah.
Okay, so quant models out there are using the same type of calculations. We now have 4 out of 4 below the 50-day. There is not much of a bull case that can be made now. And I was saying there wasn't much of a bear case that can be made back here either. We are in a really interesting time. We're going to look back and say, was this a double top? Or was this the cup and handle of all handles? Well, today's action makes me suggest, and I'm going to show you some other things why today action and what I'm seeing suggests that it's not going to be a cup and handle. I think we're in for some bad stuff. I don't know how bad. We're in October. Everybody knows October sucks. That's kind of the Trader's Almanac. Everybody knows October is October. All the crashes seem to want to happen in October. Some of them in September. But so we're dancing into this month as it is, and the first day of the month did not give us a lot to praise. So a lot of technical damage has been done for sure in the bigger picture. I'm going to keep an eye on that. But when I come back, I'm going to talk about a few things on my board here as to why I think the bears are in control, even more so than just the technical stuff we're looking at, but scan by scan, kind of tell by tell. But we'll let Andy talk about what happened or didn't happen in the AI today first.
Okay.
Unless you want to add something.
Oh, no, I've totally kind of, I agree with you, because even when we get, like I said, when we get up these, I'm not really bullish every time we go to all-time highs, because I have not seen anything in the past several months or a year and a half really to show me that this market wants to move higher. It's just pretty much been going sideways for the last couple of years, and the risk is, it's especially if you're a long-term holder. I mean, the risk is to the downside because we can't move higher. It's been that way for a while. All right, let me pull up my presenting here. All right, and let's see today what we can garner from Holly's action. All right. Well, first of all, let me point out that to the strategies on the right side, these are the strategies of all three segments that made the cut for the day. And if you can look here, I didn't put the pen and paper to it, but I'm guessing that's probably about an 75, 80% long bias on strategies, just the way all the back testing and optimization showed up after yesterday. We've been kind of going sideways for a few days. It kind of tells me, Steve, that may have been a lot of bull traps set today because all these strategies that came to play, and so obviously there's going to be a lot more long. Yeah, exactly. And there's going to be a lot more long strategies being fired when you have this, overweighting of long strategies making the cut. As a matter of fact, there was only one short strategy, and this is another thing too. There was only a couple of were putting on the brakes. All right, that's a fading strategy. There wasn't much opportunity to fade today. You had a minute, you had about what 15 or 20 minutes of up movement, and then it was down from there. So only one strategy fired from putting on the brakes, and it happened to be a gold stock, which didn't work because gold was in play today. Kind of defense stocks. Surprised downward dog didn't see anything, but for whatever reason, we didn't see anything from downward dog. But nonetheless, there was some long strategies that, obviously went into play today. Not a lot. We had a total of what 14. That's kind of on the low side for Holly's all three segments added together. But really, I think what can be shown today is she managed them very well in risk-off mode. In other words, she could see a lot of reduced risk, a few timed exit, but there were some stop hits too. So unfortunately, when you get in a tape like this, you're going to have some stop hits. But this was a double call from two different segments. This STAA, which she did happen to get out in time, entered right here, got out just in the nick of time for a nice little profit and risk off. So you can see here, guys, over here, very marginal on the losses for Holly. This is if you would have bought 100 shares of every alert that came through, you would have lost what is that, around $80. So not a bad day as far as being able to reduce the risk. Made some money in about 4 trades, and the rest, boy, anytime you get in a market like this and you're playing some long strategies, you have to I ask you what can we garner from trade the AI today, and this is a great case of managing risk. Okay, got out some 4 trades in the nick of time. Well, this one actually, obviously. Okay, so this would have been a short, really. This is an ETF, an inverse ETF. Basically for the VIX, not an inverse. I guess it would be a VIX double. So that was one she bought on a pullback and performed well. So that would theoretically be a short. So I should say there were 2 shorts fired today. But all in all, I mean, I'm not trying to defend her because she's been doing really great the last 3 weeks or so. I mean, we've been really, really proud of her. Today just happened to be caught on the wrong side with a lot of long strategies coming to play. She managed it very well with very little losses compared to what she's been, making recently. So good trader, managing risk very well. Sure. Steve, I don't want to take up too much of your time. There's not a whole lot to talk about here today, except for those items that I pointed out, unless you have anything you want to add.
No, just that, like you said, a great lesson in adhering to stops, because a lot of those trades blew extremely well through those stops. The risk on versus risk off discrepancy is huge today.
Yes, and I don't have the full risk over here, but yes, unless we could roll over here and probably find it, it would be real ugly. Full risk. Well, maybe I can't. Yeah, there it is. You can see, look at those numbers there. So as you look at those, yeah, you can see it was a risk off day. And of course, looking at the spiders, and if you're long, you're going long. Common sense should tell you it's a risk off day. If you're wrong, get out. There was no up moves today, really. Yes, Walida bloodbath. All right, Steve, I'll toss it back to you.
All right. So next up is going to be the trade of the week discussion. I'll bring that up. So, geez, let's do what I always like to do here. What did this look like a few days ago? Monday. Let's get rid of that. Is that right? Here we go. Okay, going into the weekend, this is what tracks look like. And I got to tell you, there was not a lot of things that I saw. And, you know, Friday had kind of a weak close, and it was almost like I told Andy, I said, if this does it today, if we close below the 50-day moving average today, it's going to be go to all cash. There's just no reason to try and pick anything. That's one of the reasons I don't have any handouts today at the end of the webinar for some price alerts. We just closed below the 50, and I think that's always a reason to step back and take pause and take caution. But we didn't know that on Friday going into the weekend. Staying with the A table scan, Trex is a company I'm familiar with. You know, if you're building a deck or doing improvements, a lot of people are using this weatherproofing great product. And in the back of my mind, we talked last week about how the home builders were super strong. I mean, there's just been a lot of strength in home builders, and I kind of see this as a subset of that. But the pattern always wins first. So this is just a really nice, it was a really nice kind of a shallow cup and handle pattern. So the good news is, oh, let me also add that this week was different. Because we had that backdrop of the market, I said there was a double condition this week on the triggering of the trade of the week. Not only was there a number, 90.25, I think it was, but the market had to be green. If the market had opened up red, down, and gapped open on Monday and was heading lower, I was basically saying, don't buy this. One supersedes the other. You've got to look at what the market's doing first before the individual stock. So a really nice looking pattern, and it triggered on Monday, and it had some nice follow through. And this is really going to kind of be the remainder of the theme of this webinar is how to manage these things. And a lot of you guys have heard me say a day and a half. It's really hard to get more than a day and a half out of some of these things. And boy, this was a perfect example. So like Wally mentioned earlier, you know, got a couple points out of it. Here's our congested little break. We can kind of see where the obvious trigger was. All right, yesterday was moving day. We'll get to that. Moving day means it's coming out of its range. It's making a move. It's moving out of this neighborhood and moving to the next neighborhood, moving on up to the east side, like George and Wheezy. And then we have our follow-through day. This is a perfect example of what we talk about all the time. Moving day is followed by follow-through day. But follow-through day can be very short-lived. Usually it can go into the lunch hour for an hour or two, but in this case, it was kind of following the market. But it gave us a beautiful open. So when you're trading and you get your move, a day and a half is really when I start to get antsy, because that's when a lot of the pullbacks start to occur. Now, in this particular case, Trex could have gone farther if the market had cooperated, but it really didn't. It hung around, and then it just gave it all back. But we still got a full day and a half out of it. So I just want to imprint people on that when you do get your move, that second day, expect some follow through. And you'll be rewarded if you didn't get out on day one. And you know, if you expect to follow through and you take the risk on overnight and you follow through, you'll get rewarded. But that can live very short-lived. Half a day for the second day would be the most you'd want to use. Okay, let's move on. So that's it. That's the trade for week. I mean, it gave us everything we possibly could. If you're watching the market backdrop, the bigger picture, you had to get out. I mean, it's a no-brainer. All right, but nonetheless, Trex gave us a day and a half, so we're good on that. Let's move on. I got a couple thoughts here. Oh, quickly, let's talk about a day and a half. What were some of our recent ones? Last week was Jack. Well, there's kind of the nice, let's look at the little breakout there of Jack for the most part. And we got a day and a half, 2 days for the most part. But boy, let me just throw something else at you. My gosh, look at how nasty some of these market making algorithm bots are. Let me open this up. And I don't know why Jack had to do this yesterday, but it had to do it. So Jack poked its head out right there on that yesterday, right there, poked its head out nicely and got everybody long, right? And then the algo bots smashed it. And where'd they smash it to? They smashed it down to a good 2-day low. We talk about this all the time. Look back to yesterday, maybe even the day before, but definitely take out yesterday's low and then bounce. That we've had a scan we've called bouncers for a long time, just based on that noise. Okay, so this is nothing but algorithm-based noise. Stock breaks out, brings in the amateurs who read all the books that were written 12 years ago on how to buy breakouts, slams them down, and then shakes them all out because those amateurs read the same book on where to set your stops and shake them down and take it higher. So there's a nice moving day yesterday, followed by follow through today, and then time to get out, day and a half again. And then the week before that, I believe, was FND. FND, we'll go back a little bit here. It took a while. It actually took an extra day. It took an extra week. FND did not trigger, if you guys would recall. We were watching all this volume getting all excited, but it just kept going sideways. But notice it never broke the 20-day moving average that I said would be the downside risk. So these should still stay on your radar. And then when it did go, what did it give us? Let's go to FND. When it did go back here, what did it give us? Here's moving day, all right? And for those that stayed in the following day, you got rewarded with follow through day, and then midday, after midday, actually late midday, the sell off. And then after that, that's it. That's all she wrote. So day and a half, guys, and Andy and I kind of came up with this a few years ago. The market takes 3 steps forward, 2 steps back. And if you overstay your welcome, you're going to get caught in no man's land. Anybody plays tennis out there, you're either standing at the net or you're standing at the baseline. If you're standing in between, you're going to have balls bouncing at your feet and you're going to lose because you're not quite sure what area of the court you're playing. So you're either swing trading on the baseline or you're being aggressively day trading at the net. Anywhere in between, you're going to start to lose your focus. So for swing trading, we love day and a half. You'll be rewarded. All right, so I'm glad I kind of thought about those 2 last trade of the weeks. We can go back and look in hindsight and see how that day and a half strategy works. So now where I wanted to go, what's working and what's not. All right, so a couple observations. The first observation is what you guys have seen here every week, the A table. This is a scan that's designed to show me stocks that have the high score, 85 or higher. But I also have a short float in there. I think it's set at 12%. But I haven't changed that. And my point is, typically, this particular scan, it's usually deep, down to these areas down here. I got a lot of names in this thing usually. Right now, I'm losing names. We only have 10. I can't remember the last time I only had 10 or less names in here. 5, 6, 7, 8, 9, 10 names. That's very unusual. Again, the scan is predicated on looking for strong stocks, making new highs, new 52-week highs, new all-time highs. This universe is shrinking. That's notable to me. That's a tell. The other thing that's interesting is, remember 2 weeks ago we did a little back testing. All right, we're going to do it again, and we're going to just kind of confirm what we found back then. Now, the last time we back tested these, we did them for swing trading, 2 or 3 days. We found out that one was working pretty well and the other wasn't working for 3 days. But with the volatility we've had here, I'm going to try something a little different, but still try and get something out of this notion. Now, these 2 scans are primarily entries, and I like to use them for possible swing entries. A lot of times this jam down buy will show up as a really nice move to the downside on a nice trending stock like we have here, and it becomes a nice entry point. Well, the arrow got blown through today, so today we just throw that out the window. But what was the question? What is the open versus low percentage on the A table? I'll share it for you right now. We'll just put it in the chat, and you can play around with it. But getting back to, there we go. Getting back to this scan, I'm going to look at these as more of a day trade scan. What's working on a 90-minute trade right now? Again, if we go back and look at the S&P in the last, I don't know, 10, 12 days, 1, 2, 3, 4, 5, 6, 7, 8, we'll call it 10 days. Let's just see what happens. And again, if you're a day trader, which I'm not, but I'm going to show you how contrarian entries are what you want to be doing. And by contrarian, I mean buying the new low or buying that dip below yesterday's low and jumping in for a long. Or on the flip side, this green one is selling these spike ups. Okay, this one gave us a spike up here, but came back a little bit, but still went higher. It's just one example of many. But what I want to do is see what's working better in the last 10 days only. So I'm going to back test the bullish one first. I'm going to start at like we'll start at like 6:45, end up here. The exit is going to be a 90-minute exit. just kind of trying to prove a point as to what's working intraday here right now in this crazy volatility. Maybe try and glean some idea of who's winning the battle. Risk management, we're going to risk 3% to make, we're going to risk 1% to make 3 on a 90-minute trade. And here's the part we're going to customize. We're only going to do the last 10 days. We're just trying to see what the last 10 days has been showing us in this market. Now, again, this is a new low, but it's a contrarian, so it's a buy signal, so we're going to simulate buy. We'll see what we get. We got red, nothing to really even try and create. Let's just put this over here for a minute. All right, let's go down to this one. This is a pop-up sell, meaning fade the rips. We are selling the pop-ups. So it's basically a flip of the other one for the most part, and see what happens if we short sell for a 90-minute hold. Let's start there. Timed exit, we'll do a 90-minute hold. So we're doing apple comparisons here because it's really a mirror image of these two scans. One's doing one and the other one's doing the mirror opposite. And we're trying to just sample the last 10 days of volatility to see if we can glean some information. Same risk management parameters, of course, risking 1 to make 3%. And only going to do the last 10 days. Let's see what we get on the simulate short sell fade of those stocks that come through making a new high. By the way, the first one, we only got 15 total trades, not too many. This one, we got 40. And what do you know? We're actually in the green here. So to start off with, we can look at the optimization right off the bat and say, well, this is interesting. Right off, okay, so we can set our max value at 50 bucks, and it looks like most of the things, under 50 bucks are giving us, let's see, time of the day. Well, that's brilliant right there. There's no time of the day where it really isn't working. We'll just run this one more time just to see after I took out the price maximum of 50 bucks, and then we can kind of compare these two. Turn this one off. Okay, so here's fading the longs that pop up in the middle of the day for 90-minute holds. Whoops, wait a minute, I did the wrong one, didn't I? Hold on. Let me try this again. That one, back test, simulate sell. That's what I did wrong. Okay, so we're testing 90-minute holds intraday to see what's happening when things go to low. So when things run up and spike up, look at that, we're getting a 68% win percentage on 32 trades, green across the board, except, these are your valuables, these are your net commissions and things like that, which of course, hey, we're gonna have to get rid of this, aren't we, Andy? The commission, free commissions left and right showing up everybody now. So those are your variables, but the point is the dark line is moving from lower left to upper right, as opposed to what happens if we try and go long, which we've been doing month after month, year after year, buying the dip after it took out yesterday's lows. Well, shoot, last 10 days, that has not been working. Last 10 days, fading the rips has been working by a factor of like 3 trades, or 2 to 1, 32 trades to 15 trades. So here is yet another way in which I'm using trade ideas to kind of give me a tell as to what's going on under the surface beyond just my current bias of looking at what the indexes are doing. All right, so we've got 2 things. We've got a lot less high quality setups to the long side on the A table. And we've also got intraday trades showing us that buying the dip is not working, whereas fading the rip is working. Let me check my notes here. I think I had something else. No, I think that's pretty much it. So these are just a couple of ideas that are just making me put up some caution flags. Things are different. My A table is not that many. That's different. These used to be the opposite. The jam down buys used to work a hell lot better than the risk up pop-up fades. That's flipped. So more pieces of the puzzle kind of trying to help me out here. All right, so let's go on to moving day again. Moving day is a name I just coined. Well, the golfers coined it. It's Saturday. It's the day the golfers move up the leaderboard and really make their move. Well, stocks can do the same thing too. I'm going to use the real world example here, which is Twitter. And I'm short Twitter from a couple days ago. It's a swing trade. And I'm going to consider today moving day. All right, let's just flip everything upside down. Flip everything upside down. There's our congestion, and Twitter is breaking to the downside as I hoped. out of that area of congestion. And on moving day, what do I need to see? I need to see that 10-period moving average doing the magic that it always does when stocks are in movement and momentum. And it did exactly what I wanted. So right there, look at that. The stock bounces, it gets ahead of itself. I mean, you almost expect this at some point. It gets ahead of itself, and the first thing I'm looking at is what is this declining moving average going to do when the price hits it? And when it hit it, it wasn't even a question. It immediately turned red and got thrown back down to new lows. So we always talk about, oh, you got to let your winners run, you got to cut your losers fast. Well, I'm trying to give you guys a way in which to stay in good trades. If this is moving day, we want to stay in this thing all the way to the close. And this right there gave me tons of comfort that this was in fact moving day, and moving day was still on. Look at this, towards the close. Was moving day still intact? Yes, it was. It could not close above that. I'm just gonna consider that last little hiccup basically market making algos squaring up for the day. But we had a full day of the price action adhering to our momentum line, our fast line. So tomorrow, I'm really hoping for a gap down or some sort of opening wash, and I'll take a profit on a day and a half. And where I think I would like to take a profit, we look left, we have a couple options here. We have a little support right there, which I'll draw, but we can go for the big prize, which I think is this gap back here, which I think is very possible it could be filled. So tomorrow on the open, I'll be watching for hopefully some follow through, and either one of those targets, maybe take a little off, or maybe just try and hold out for the bigger brass ring. I think it's possible we could get a gap fill, and that would be the anatomy of a perfect day and a half swing trade for me. It adhered to everything I needed to today. We have a nice target in mind, and if we can get some follow through tomorrow, I think that's in play. So I bring this up because it's so hard to stay in trades. It's easy to get out because we see a little profit and we fear that profit leaving, but the money is made on letting them run when they're supposed to. And I think that's a good example. So, you can look at all the charts you want out there. Anything that's got a giant green candle to the upside going long, anything that's got a giant red candle to the downside, and it's breaking out of some sort of definable range that you've defined, that is what I would define as moving day, and that's where we try and make our money. Sometimes we have to sit in them for a little while, maybe a couple days or two before it even does anything. Those days don't count. The day and a half counter doesn't start until we get moving day, So FND was a great example of that. Some of the people may have taken a position back here and it didn't do anything, but you just got to let it go. And you look at it and you say, well, it's not moving, but it's not breaking. I'm really going to be upset if I get out of this thing just because it's not doing anything and it goes. Trust me, you don't want that. Those are really frustrating as well. So that's just some thoughts I had on how to try and stay in a trade and what your target can be and when not to overstay a trade. Not to overstay a trade is going to be the second half of the day. Question, let's see. Wally, could you share the pop-up sell? Sure, I can do that. Save and share and copy. I'll drop that in the chat. All right. Yep, you got it. No, that wasn't a 10-minute hold, Frank. That was a 10-day hold, I think. If you're
I think you did, actually, Steve. I wasn't sure if you were trying to, but you might want to go back and just run it again for an all-day hold, because I think you did accidentally plug in.
Everything should still be the same.
Timed exit.
Oh, timed exit entry.
Yeah.
Thank you. Thank you. Let's try that again. Simulate sell. Would probably be even better.
I was wondering why the average winner was so low.
Well, 10 minutes isn't going to give you much time. There you go. That's a little more prettier. That's a little more prettier.
That's better.
Okay. You guys are good. Thanks for catching that.
Yeah,
Frank.
you don't get anything bad out of them, I notice.
Yeah. Yeah. I don't try, but they do. Can't even get a simple cuss word by them. Lastly, we're going to talk about the TCL flip. So I do not feel comfortable giving any longs or maybe even any shorts out. When the market closes like this and breaks down in a big red candle and closes below all significant levels, it's really time to pull back and say, whoa, wait a minute. So let's think about this. If we do get some follow through, well, we used to have, and I didn't say used to, I don't use it much anymore, but the old, no, not the washout bounce, there we go, the trend change lubricant. This was a scan that looked for stocks in downtrends that were looking for, like, they were basing and then moving up, maybe even having some short float. So look at all these stocks. They're going to be in downtrends, moving up. Downtrend, basing, moving up. Downtrend, basing, moving up. Downtrend, basing, moving up. So what if in the current market environment we use this to our advantage by taking advantage of the flip? All right. What if we were looking for stocks that were trending up, topping and rolling over? Well, that would be the mirror opposite, really, of what we're looking for. So I hit the flip button. Now I'm going to click hit OK. And I have to do one more thing because I had a short float in there. The short float doesn't matter on this because we're not looking for longs. That's where you look for the short squeeze. So the short float filter is no longer of use to me if you're looking to go for breakdowns. Where are you, short float? There you are. This needs to come out because that's no longer an issue, and it's going to suppress a lot of names we might otherwise want to see. So we'll turn that one off, and let's see what we get. And we have more than I think we even bargained for. So rather than go through all of these, let me just show you a few ideas. I mean, these are stuff, hey, look at that. There's the exact inverse. We have a market now to where if buy the dip no longer works, and if, meaning wait for that obvious level that always worked before, and then the market shakes you down and it does that big wick to the downside. We've been talking about this ad nauseum, and then reverses back up, and before you know it, that was the reversal area right at the level of where you think everybody would stop out. Well, if that no longer works, then this is the type of scan that might become a little interesting because there might be some follow through on breakdowns of levels like that. Or let's look at this, or breakdowns of levels like that. Let's take a look at this, or breakdowns of levels like that. So there could be a lot of high quality setups on here that are just waiting to fake people out on the buy the dip no longer works. Here's Shake Shack. It looks like it already trying to close below the level of interest. See that? So this is an interesting scan. I'll go ahead and I'll hand this one out as well. I'll hand it out in the flipped version so you guys can go through, because the last thing I'm going to go through is, try and find some ideas and then, send them out. There's just way too many on here. I just want to leave you with the concept of taking a simple scan that looked for stocks that were beaten up in a downtrend, putting in a strong base, and then breaking their downtrend, coming back up. We can do the same thing by just hitting that simple flip button, looking for stocks that have been on a nice uptrend, that are topping and that are rolling, or it's the mirror opposite of the trend change reversal. So I'll go ahead and save and share a copy of this. And we ended a little early today, so because I'm not going to be handing out I'm not going to be handing out there we go, price alerts. So if Scott's got his ears on, as soon as I drop this in the chat menu, if there's no questions, we'll bring Scott in, but let me just type in flipped trend change, paste, and you guys can play with that and see if there's anything. I mean, to me, if I'm looking through this, that Shake Shack looked really interesting as it was happening, in real time. Look here, it tried to reverse. Look at that, but that's not working today, and it might not work tomorrow or the next week. I don't know, but that was the green candle right there that was trying to get back in the game and it couldn't do it. So could be some interesting stuff on there. If the market rolls over and we start to get a little ugly and everything changes, there could be some interesting setups on here. This one, for the most part, did exactly what you'd expect it to do, but we'll see what tomorrow brings. Meaning, look, at dip below there, and then it popped right back up after trying to run the stops. But those moving averages coming down on top might have a little something to say about it today, tomorrow, or the next day. So, all right, unless there's anything Andy wants to add, it looks like we're caught up in questions.
No.
No. All right, I'll put the slideshow back up, and we'll bring in Scott for some parting announcements.
Yeah, thanks, guys. Before we go, the summit's coming up later this month. Still have a few tickets available, so go ahead to trade-ideas.com/summit. If you can make it to San Diego, use that code SummitSD, save a little cash. Also, good reason to do it now is we still have some rooms at the Kimpton Palomar Hotel that are in our block of rooms that are available at a discount. So if you do that now and get that information, you can reserve a room for a great rate. If you can't make it, go to trade-ideas.com/livestream, put in your email address to get updates about how to watch it on the day. We have a new series of ebooks out. Both Steve and Andy contributed chapters to it. Just go to trade-ideas.com/setup. Put in your email address to get the download links to the 3 books. Each one has 2 chapters, some cloud links to open the strategy windows that they're talking about, and each one's arranged by topic. So get those. They're free. They've been getting a great response. We also have a podcast, new episodes out on Fridays, most Fridays. So search for Trade Ideas Podcast in your app that you listen to podcasts in and hit the subscribe button. Get ready for the next episode. Check out the archives. There's a code that's good, and it is Save on Ideas. Use that code to save 15% off the first month or year of Trade Ideas. Those of you that are on Standard can also use it to do an upgrade from Standard to Premium. Keep that in mind. Write down the code. Use it. We're going to have this recording of this webinar up later on tonight or tomorrow. You get an email reminder about how to find it. Any questions, shoot us an email to info@trade-ideas.com. That goes into our help desk software, gets routed to the appropriate team member. It's the fastest way to get a good reply. You can also follow Steve Gomez on Twitter at TodayTrader. Also follow at Trade Ideas and at QuantBot for Jamie. Facebook.com/Trade Ideas Pro is the page on Facebook to follow so you can share stuff with your friends. So thanks all. We'll have the recording up soon. Thanks, Steve. Thanks, Andy.
See you next week.
Thanks, everybody.